We were looking at data and actually more than a year ago anticipated a very different world. What we didn't anticipate, of course, was the extent and the length of time that we were going to see supply chain disruptions. And we certainly did not expect Russia's invasion of Ukraine.
Cathie Wood has given out her latest market updates, and the current market condition seems not too promising according to her. According to her, global supply chain disruptions and the ongoing Ukraine-Russian war has added fuel to the fire to further worsen the global economic conditions. Cathie also mentioned the name of 3 prominent business leaders, and what they said is quite worrying as well. Markets have been tumbling this year through investor sell-offs. Inflation is running at its fastest pace in decades, threatening to eat into corporate profits and rein in consumer spending. This resulted in slower economic growth. U.S. GDP falls 1.4% as economy shrinks for first time since early in pandemic. On April, NASDAQ loses nearly 4%, hits fresh low for 2022. And the Federal Reserve is kicking off what analysts anticipate will be its most aggressive monetary policy tightening campaign since the 1980s. Something many investors worry may tip the economy over the edge into recession.
We were looking at data and actually more than a year ago anticipated a very different world. What we didn't anticipate, of course, was the extent and the length of time that we were going to see supply chain disruptions. And we certainly did not expect Russia's invasion of Ukraine. So those have been variables, we've had to work through in terms of our own thinking about the future. But we did come to the same conclusion, that we were probably going to see more deflationary forces at the end of all of this than inflationary forces. And I believe that we are in the early stages of seeing that.
Now, coming to the business leaders' mentions, Tesla's CEO Elon Musk has a super bad feeling about the economy and needs to cut about 10% of jobs at the electric car maker, he said in an email to executives seen by Reuters. Musk has warned in recent weeks about the risk of a recession, but his email ordering a hiring freeze and staff cuts was the most direct and high-profile message of its kind from the head of the automaker.
We've had some very interesting comments on the economy by business leaders. Just yesterday, I believe, Elon Musk said that he has a super bad feeling about the economy. And we're trying to figure out what he's looking at. We know his own sales were up. Tesla sales in the month of May, I believe, were up globally 60%. And almost every other auto manufacturer's sales were down, and some of them down by a lot. So it's not his own sales, except perhaps at the margin, maybe something that he's seeing in orders. He may be reflecting on the decline in total auto sales. So that's interesting.
Jamie Dimon, the CEO of JP Morgan Chase, has warned about an economic hurricane due to the ongoing Ukraine-Russian war and the Fed.
It's a hurricane. Right now it's kind of sunny, things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And you better brace yourself.
Cathie also talks about this in her update.
Jamie Dimon at JP Morgan talked about a hurricane. Be prepared for a hurricane. He doesn't know what kind of hurricane. Is it going to be a mild one, or is it going to be a Hurricane Sandy, which would be quite serious? But I think he's changed his tune a bit in the last month since JP Morgan reported earnings. So what is he saying? Well, he sees a lot of business activity and must see it slowing down, if I had to guess. The president of Goldman described this environment as a confluence of shocks that in his career has been unprecedented. So again, he has a very good perspective, global perspective, every sector. And so I would say at the margin, these 3 business leaders are seeing the economy in some form of stress. For the first time in Bitcoin's history, we've seen 9 consecutive weekly declines. And so when we first looked at that, I think the tendency was to say, uh-oh, that's really negative. My question to the team was, well, could it be oversold? Could the rubber band be stretching here? Or is there something wrong? And we don't know the answer to that, so we put that in neutral category, and you'll see we'll put each of these metrics in bullish, bearish, or neutral. Bitcoin has gone down from in the last month just from 40,000 to 30,000. Another reason is the high correlation with the NASDAQ. Now, interestingly, in the last week or so, that correlation broke down a bit. The NASDAQ had a few really good days. Bitcoin did not. So there's something else bothering Bitcoin. It is down 57% since its high at almost $70,000 in November. Its 200-week moving average is 22,000. So today we're at 29,000, I think. Its 200-week moving average is at 22,000 and rising. Now, the reason that particular number is interesting to us is we initiated our first Bitcoin position at, back then, it was the 200-week moving average. It was in the $225 to $250 range. So we've come a long way since then, but that has proven to be a nice support. So that's also interesting. A couple of other points I'll just highlight, and you can see in the report. It appears that the short-term holders, and you can see everything in this ecosystem. The transparency is amazing. It does appear, according to our metrics, that short-term holders have capitulated. That's very good news in terms of putting in a bottom. Long-term holders are at an all-time high at 65.7%. That means they've been holding Bitcoin for at least a year. We've got some very strong holders or hodlers here. That's also very good news. Although we might see some long-term holder capitulation to mark the bottom.
Yes, short-term Bitcoin holders have capitulated. The MVRV ratio, which measures Bitcoin's market value relative to the flagship cryptocurrency's realized value, has fallen 35%, the break-even price. The popular on-chain metric is often used for gauging investors' mood when investing. Yet, long-term holders still have diamond hands. At the same time, more than 66% of all Bitcoin in circulation has not moved in over a year, which is yet another record high. As we come to the end of the video, what do you think of Cathie's insights, and also that of the global business leaders mentioned in the video? Let us know your thoughts in the comments below. Until next time.